Hello to all you passive income investors looking to generate passive income through dividend stocks. In this video, I'm going to bring you one dividend stock you can buy 90 shares of that will generate $750 in annual passive income. I'm going to share with you how to do that. I'm also going to share with you why I've picked this particular stock to generate that passive income, because there are a lot of dividend stocks you can choose from. So why am I choosing this one? I'm going to share that with you in this video as well. So let's jump right in. Let's see what the stock is and why this is the one to get if you want to generate 750 in annual passive income.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the stock that I'm going to recommend for generating passive income through dividends is Home Depot. Home Depot declared a third quarter dividend of $2.09. That's the 147th consecutive quarter the company has paid a cash dividend. So you have a long history of this company paying dividends. So let's see how this all adds up. Let's do the math. All right, so $2.09 in quarterly dividend income will annualize into $8.36. So if you want to build $750 in annual passive income, you need to buy 90 shares of this dividend stock that will generate $750 in annual passive income. Now that will lead to the total purchase price of $31,147, which you might see as a hefty price to generate this passive income, which it might be because this dividend yield, if you look at it in terms of the yield percentage, it's not very high. But when you look at it in terms of the quality, the chances of increasing, and the value you're paying per share, which I'll talk about a little bit later, I think you're getting a great deal to generate passive income through this dividend stock. Let me share with you further. So the Home Depot in the last decade has increased its revenue by more than 2x, growing from 75 billion up to 153.71 billion in the last decade. The company's compound annual growth rate in the last decade has been around 7%. That's impressive for a brick and mortar business. For a brick and mortar business, that's impressive. Remember, brick and mortar businesses are not fast growth businesses, and Home Depot has been the best in class in that category. I'm going to show you more on that in the next slide. So here I have the operating profit margin of several brick and mortar businesses, or primarily brick and mortar businesses. I have the Home Depot, its main rival Lowe's, Target, Walmart, Costco, and Macy's. Different brick and mortar businesses, different business models, different categories, but I just wanted to share with you the operating profit margin of all of them and how Home Depot is the leader in this category. So Home Depot, 14.51% in operating profit margin. The next best is its main rival, Lowe's, at 12.83%, and everyone else is below double digits. And that highlights the profitability of the home improvement business model. Home improvement businesses like Home Depot and Lowe's sell the type of things that's difficult for online retailers to mimic. Think Amazon. It had difficulty encroaching on Home Depot's business because it sells big, bulky, heavy items that's difficult for Amazon to ship to your house, right? How is Amazon going to ship a 20 by 34 piece of plywood to your house, right? That plywood might cost $27 a piece, but that might cost Amazon just as much to ship it to you. And it can't ship it to you usually in a truck with only one driver. It might need multiple drivers to help carry that and deliver that. So it's just a difficult business to do online. It's more a business that favors the brick and mortar model, and Home Depot has benefited from that, as you can see. Its got that competitive advantage that's allowed it to grow revenue at nearly double digits in the last decade and maintain the superior profit margin. And it's maintained this profit margin. It's even better than its main competitor, and it's maintained that lead in the last decade. So not only is it in a favorable business category, the home improvement industry, but it's also the best one in that category. So it's the best company in a lucrative category. That's attractive if you're a dividend stock investor, because if you're generating passive income, if you're looking to generate passive income, chances are you're not looking at this as a 1-year investment, right? When you're thinking about generating passive income, you're probably thinking about generating passive income for the long term, a sustainably long-lasting passive income stream, something like, a few $1,000s per year for the next 10, 20 years. You want to retire on this income, or you want this passive income so that you can work less hours at your regular job and live off of this passive income. It's not like a one-time thing that you're looking at. That's why it's important to look at companies like Home Depot, because they can generate this passive income for the long term. In fact, they can increase the passive income for the long term. You might start with getting $750 in annual passive income, but it's reasonable to assume that number is going to grow over the next decade because the company's growing revenue and it's growing its profits, and that's generating more cash flow that the company can use to pay more dividends. And for those reasons, Home Depot is an attractive stock in this category, and why I'm recommending it to passive income investors. Additionally, Home Depot stock is trading at a forward price to earnings ratio of 22.2, which is not cheap, but it's not expensive either. You're paying a fair price for a business that's proven itself to have a competitive advantage, to grow revenue, to be best in class, to have an attractive opportunity. The home improvement industry generates $900 billion in sales annually. So it's a massive total addressable market. You get all these attractive characteristics in this dividend stock at a fair valuation. And if you look at over the next 2 years, the consensus estimate for analysts is for Home Depot to grow revenue by 1.6% in 2024 and then increase again to 3.1% in 2025. 2023 was a pullback year. Remember, Home Depot and Lowe's, home improvement in general, was one of the prime beneficiaries of the pandemic. People spending more time at home spent money on their house. They painted nearly every room. They did home improvement projects. And in 2023, when economies reopened, people preferred to spend money away from home, spend money on restaurants, travel, those kind of things. So Home Depot pulled back. 2024 is going to be another one of those years where Home Depot is going to grow at less than its typical rate. It's slowly going to transition back up to its typical rate, right? Going from negative 3.1 to 1.6 to 3.1. And then in 2026, it's likely to grow at even a higher rate than 3.1. But even at these growth rates, earnings per share are expected to grow by 3.7% in 2024 and then 7.2% in 2025. So the company's recovering and coming out of that pullback year in 2023 and coming out of it stronger than before. So for all of these reasons, I think if you're a passive income investor and you want to generate $750 in annual passive income, Home Depot stock is an excellent choice to do that. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.